The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to the August edition of Digging into the BI. This is where members from the Maryland and regional chapter, the Maryland chapter and the DC regional chapter get together and look at the latest issue of the BI magazine. And here are the four stocks we're going to be looking at tonight: VirTra, FedEx, GRVY, and Gap. So we're glad you're here, and let's just go to our next slide and get going. So this is our standard disclaimer. We're doing these for educational purposes. They're not intended as a buy, sell, or hold recommendation. We believe, as Better Investing does, that you should conduct your own review and analysis of any companies. And any securities that we talk about here may be in our personal portfolios. We try to alert you to that. But remember that we're not, if we're showing you any products or any locations here, we're not promoting or endorsing those particular websites, products, or services. And as you see, this session will be recorded and put up on our YouTube channel, hopefully later on tonight or tomorrow. Let's go to our next slide. So again, I see most people in this audience are members of Better Investing, but if you're not, if you're seeing this on YouTube and the like, this is who Better Investing is. You'll see at the top of every page is a URL that will take you to the betterinvesting.org website. But we're an investment education organization. You can see the blue underline down there. Anytime you see a blue underline in any of these highlights, if you have the slides, that means if you're here live and not seeing it on YouTube for the first time, those will take you to the exact locations of what we're looking at. We're focused on long-term fundamental investing, and all the people that are making presentations tonight were all volunteers in the Mid-Atlantic region. So we're either in Maryland, DC, or Virginia. Next slide. So here's again our YouTube page. It's the channel is Digging into BI. You can search for it just by going into YouTube for that. We are trying to get our subscribers up because that's how the algorithm works. We're at about 157 or so. We'd like to get over 200 subscribers. It's nowhere near what the big influencers have. However, in return for this free education program, we ask that you sort of like and share this video when you go over there, and also to make sure to subscribe to the channel. All of our presentations that are up on YouTube are put into what are called chapters, and that means you don't have to, you can just forward up to the next presentation. You don't have to listen to all of them. If you just wanted to be able to hear someone's presentation about a particular stock, you can do that. Next slide. And again, most of you are regulars and we haven't had this in a while, but we just want to show you where you can be able to get these handouts. So if you go over to the right-hand side there, look at the one for the green arrow over to the handouts. Go ahead and make sure to start downloading them. You can, those are the 4 completed SSGs that we have for tonight, plus this slide deck. So go over there and get it. You can share that with your club members or other friends or people that are interested in joining your club to show you how we sort of put together stock presentations. If you are having trouble with any of the audio, there's a link to be able to help you get in your sound set. Next slide. So why do we do this? Well, we're doing it because we want to be able to show you the resources that are available with a BI membership. And if you don't have a BI membership, again, there's a free 90-day trial that's there. We focus on beginners or people that are uncertain with their judgments on using either the stock selection guide, that's the form we're using, commonly known as the SSG. Sometimes we'll talk about the PERT report for when we're doing stuff with portfolio management. What we're really trying to do is show you the best practices that a long-term fundamental investor would use. And this is, again, a joint program from the 2 Mid-Atlantic chapters, the Maryland chapter and the DC regional. We want to promote our model clubs, and we also want to promote your club through the Club Connect program. Now, you don't have to be a member of Better Investing to be able to be here. And you don't have to be in the Better Investing community in the Mid-Atlantic region. I see there are several people in the audience that are from outside Maryland, DC, and Virginia. We're glad you're here. Thanks for coming. Next slide. So in just over an hour, we're going to give you 4 stock presentations. 2 will come from the member-only magazine, the Stock to Study and Undervalued feature, and 2 will come from stuff that we've heard from inside our community, from the website, the magazine, and tonight we have one of them that actually came from hearing it at Bink. It can also be from personal experiences, but we're trying to show you all the resources and all the information you can get for stock ideas just with your BI membership. There are a lot of other resources a lot of us use, but we want to show you what you can get just with the BI membership and how many good ideas that there are in the magazine and on the website. Next slide. I'm still seeing slide 7. Cheryl, are we on to the next slide? I'm seeing us still on slide 7.
Yeah, we're on to the About Us news release.
Okay. I'm having a lag time here. So anyway, in here, in this time, we have how we are able to find the how we're able to find stuff. Again, you don't have to be a member of BI to see this. You can just go to Home, About Us, and News Releases. You can see that these stocks were announced in May of last I should say May 22nd, and you can see that they already have the ones for the next 2 months in there as well. So that's how you can find it, and you can share that and look at some of the ones that are coming up for future months. Next slide. So you can also sit there and see, don't miss out any of the future announcements. There's a way to be able to see the stuff that's coming out there. If you go into the upper right-hand corner where it says My Account, and you click on that, it will pull up the stuff that's over on the left-hand side, and you want to look for the email subscription page, one in the green circle there, and then from there you click on that, and it will open up the stuff that's over on the far right-hand side. And you want to go down and hit that, where the arrow is to be able to get your local stuff. But before you leave that page and hit the Save Changes, go up to the yellow, and that's where you can get news for what's coming up in the Better Investing community. Next slide. So what you can get on this, and I'm on slide 10 here, is if you are a member of Better Investing, you get the weekly newsletter, and it highlights a lot of stuff that's going on educationally and some of the upcoming webinars that they have. Comes out to the close of business on Thursday, and if you signed up for it and you're not receiving it, I would check your spam filter. There's a couple different things there that look kind of interesting in terms of webinars and stock ideas. Go ahead and take a look at it. I always find that a great resource to take a look at it. Next slide, please. We're also up on Facebook, and you can be able to find us there. We're trying to make that a joint Facebook page because, again, we don't get that much traffic on it, and it just takes a lot of time. This is another way that you can be able to find us. It's shared by BI and non-BI members alike. Sometimes I'm able to get notices up there in time. Sometimes I don't, but it is a way to be able to reach out and see it. So make sure if you're on Facebook to go over there and like it, and so that way you'll be able to see notifications when they come in there. Next slide. And Cheryl, I think this is you, slide 12.
Hi. We have every month a Money Matters book discussion, and the next one is going to be the 20th of August. We are going to have podcast on ETFs versus mutual funds and active ETFs, what investors need to know. It's going to be a Morningstar panel, and you can, there is a link there to get to it, or you can dial in on your phone, and please join us. This is a free book discussion that we have every month except for the month of December. Back to you, Kevin.
I'm sorry, Cynthia, it's to you, and tell us about your club.
Good evening, everyone. My name is Cynthia Bonham, and I am a part of the In the Black Investment Club, ITBIC. We started in 2021 with we have 7 partners now. We span over 3 states, and that's Maryland, Virginia, and New York. We're an online club only. We are, again, 21, 2, 3, so 3 years young. We meet every month on the second Sunday at 7:30 p.m. and we go to 9. Again, I mentioned we are online. We're going to study on my birthday, August 11th, selling strategies, and we're still determining the stock to study. My contact information is there, msbonham0811@hotmail.
I'm sorry, it should be back to me now. So yeah, this is one of my clubs. This is the Montgomery County Model Investment Club. We meet on the third Wednesday of every month. We have 5 partners. We are always looking for more people. We're an online club, so you don't have to live in Maryland or even in Montgomery County to be able to see stuff. You can be able to see, I forgot what our education is, so that's the reason it's to be determined. I couldn't get it. And then the stock we're looking at is Powell Industries, which was one of the ideas that we heard, or the presenter heard at BINC. So just like Cynthia's is going to be on something she heard at BINC, we're looking at one as well. So there's a picture of us with another club. We get together quarterly for social events to have a potluck, eat, and talk about stock. So if you live in the area and you're interested, reach out to me or reach out to that point of contact and we'll let you know about it. Next slide.
Good evening, everyone. I'm Paul Ware-Dunn. I live in Northern Virginia. We have an investment club that's called In Pursuit of Retirement. We started in 1995. I actually joined in 1996. And we have 5 partners. We meet the third Friday of the month. It's an in-person meeting. It's hosted a different spot each month. We're mostly in the Gainesville area of Northern Virginia. Our education usually is something to do with the BI online tools. And we usually do a show and tell projected on the TV. But we haven't decided yet what stock to study at our next meeting. Our point of contact is our president, Dave Davis. His email is there. And we were actually featured in last month's BI magazine, Repair Shop. And so if you want to read what we're doing, you can look at last month's. Anyway, next slide.
I read it and I was really interested and saw a lot of good things that you were doing. Cheryl, over to you and tell us about McNova.
That stands for the Model Investment Club of Northern Virginia. We currently have 14 partners. We were one of the first model investment clubs. We started back in 2008. We meet on the second Tuesday of the month, and we meet virtually, so there's our online link. The education is going to be updates to the SSG tools, and the stock to study is Ares Capital Corporation, ticker ARCC, and the point of contact is down below at the bottom. And please join us. Okay, the next slide here is talking about Club Connect. So that's still with me, Cheryl Patterson, for those who don't recognize my voice. This is a new program. It took the place of a Visit a Club program, which was kind of stiff and stilted. And this one is more proactive in terms of connecting clubs with potential partners. So if you have a club that needs additional partners, you can register it there. And also for members, individual investors who are looking for clubs out there to join. And so please look into it, fill out the forms if you would like to either join a club or looking for membership for your club. And hopefully you will get some good ideas, good people to join up with you. Back to you, Kevin.
Okay. And since this is digging into the BI, we want to be able to show you the latest issue of the BI magazine. And you can get it either on an app that can be on your laptop, a tablet, or your smartphone. That's coming from my smartphone over on the left-hand side. You can also get it in the e-magazine, and that comes out earlier than it would be if you wait for the old horse and buggy and the mail to be able to deliver it to you. So go ahead and sign up for those things, and they'll be able to help you see stuff sooner. Next slide. So one of the things with the featured stocks, the stock to study and undervalued feature, is that there are additional resources that are available for you. And if you see where that red arrow is, where it has analyst reports and other resources, that's where you can get additional information for either the stock to study or undervalued feature that isn't in the magazine. If you want to be able to get the mobile device, you see where that green arrow is. It's a different sign-in than what your sign-in is for your regular BI membership, but it's pretty straightforward. You can walk through it and take a look at it. And from there, you can then go over to view the magazine issues in the center there and take a look at sort of the old the magazines and the archive there. Next slide. So one of the articles that struck me this month was actually Cy Lynch has a periodic, I think it's like a quarterly column on growth stock. And he was talking about how it was time to be able to buy some more of Starbucks, even though it's been beaten down. And again, as he was talking about in this, he goes, he's still looking for strong management. And he thinks Starbucks can address any of the challenges that are there. He goes, you know, you don't just take it on blind faith. But what you do is you sit there and you see is management addressing the problem, and are they working on it, and are they executing their plan? And that's what you'd see with a lot of stocks. In fact, the undervalued feature usually is some kind of one that's been down a little bit, and it's a great way to see is management up to the task of making the changes. So keep that in mind. Let's go to our next slide. And here are the things that are coming up in the BI community. South Florida has an online free event they haven't announced when the third and final one is. They had one just this last weekend or the weekend before. It's usually on a Saturday where they sit there and they've been going through some analysis that's been really good. And then also the Georgia chapter has their annual uh, investor fair that's going to be on, I think it's the 24th of this month. It's not listed in here, but you can go to the Georgia chapter and see it going through the our community part, and it costs $20. And they have a full day of activities there. So you don't have to go down to Atlanta, Georgia to see it. And then the Washington chapter has an event coming up, I think in September, October. So take a look at those things. Next slide. Well, we're done doing all the intro, so now it's time to be able to look at some of the stocks. And the first two we're going to look at in core. Cynthia is going to be able to do VirTra that she heard at Bink, and then Paul is going to be our newest presenter, and he's going to take the stock to study and talk about FedEx. So let's start talking about stocks, and let's give it over to Cynthia.
Awesome. Good afternoon, everyone. My name is Cynthia Bonham Williams. I'm at the Maryland. I am a board member at the Maryland chapter. I'm a volunteer as well. Again, I mentioned earlier, I'm with ITBIC, which is the In the Black Investment Club. We started back in 21. Today, VirTra, as Kevin stated, I was calling it VirTra, Incorporated, traded on the NASDAQ with the ticker symbol of VTSI. And I heard about it at the Bink. Next slide, please. What their current price is $7.78, and that was as of Friday this past. They're in the industry of aerospace, defense, and the sector is technology. You may even, when you do your study and your research, if you decide to research this even more, you may find it in the industry software and application. So you may see, you definitely don't see technology, but you may see software and application. It is a small cap company. It's under $1 billion in sales. Next slide, please. Again, I found this, or I heard about it in one of the sessions in during the Bink conference in Chicago, and a conversation with a couple of friends, new friends that I met at the bank. We had a conversation about all of the stocks that we heard. So we're chatting about it. This is where I found it and decided I wanted to dig into it a little bit more. Hope you will after you hear it about it tonight as well. Next slide, please. So a little bit about the company. It's a U.S.-based company that stands at the forefront of immersive training simulators for law enforcement, military, educational, and commercial sectors worldwide. They are renowned for their pioneering the first 300 degrees small arm simulator. Their portfolio includes advanced force training, firearm simulation systems, all enhanced with the patent technology. They're deployed in hundreds of agencies across 40 countries, and they have stick and stay customer base. They have a stick and stay customer base. Next slide, please. Just give you a little snapshot of the companies, showing a track record of consistent growth, looking at the total revenue, gross profit, and net income, all increasing. So again, just showing you that. I didn't put this one up, but I wish I did. Their balance sheet shows a clean capital structure to fuel their growth. They have $22.4 million in cash. They have 11 million shares outstanding, and they have, and I can talk about it a little later, 14 million in backlog. Next slide, please. I want to mention a little bit about their product, their portfolio product. So their components, scenario software, recoil kits, threat fire, and other safety accessories. It sells simulators and related products across the globe through their direct sales force and international distribution partners. Services include installation, training, limited warranties, service agreements, and support, of course. Every simulator ships with their VTSI, which is their independently certified, proven curriculum. VTSI says that they have a simulator for every space, from their compact virtual XR headset to their 5-screen, which is the V300, as you see listed here. Just to show you a couple of their products. Next slide, please. Awesome. Their targeted market is law enforcement, military, educational, and commercial sectors, as I mentioned earlier. But just to name a few of VTSI's notable existing deployments, they are in domestically work with Arizona Department of Public Safety, Denver Public Police Department, the New Jersey Transit. On the international side, I mentioned there over across 440 countries. So some of the countries are Australia, Brazil, Colombia, and I have it listed there. And with that, they have a potential to expand domestically over 18,000 U.S. agencies. So just wanted to point those things out on this slide. In addition to the law enforcement, next slide, please. They also have the targeted audience, as I mentioned, with the military. But just to start here, I wanted to talk about some of their growth tactics. They're leveraging several of their strategic partnerships. A couple of names I can throw out there are for Science Institute and the National Sheriff's Association. They're leveraging them to grow even more by getting in front of other customers. So they're leveraging what they have, their partners currently. They're generating new sales with medium to large police departments. Other growth tactics are introducing new product categories to increase recurring revenue streams and direct transfer of technology from the law enforcement industry into the military industry as well, seamlessly. Next slide, please. So now we're going to move into the FSG. I was tasked with doing my stock study in CORE. So this is snapshots from CORE. What I have here is, if you look at the bottom grid, it talks about the sales and the history of the sales and the EPS, where the growth is 19.9% for sales. EPS is at 47.2. I did knock out the anomaly in 2019. Without that, it was like 275. So I just kind of knocked that out because it was a little off from the others. And I came up with the 47.2 for the EPS. So my forecasted sales and EPS, the 21% for sales estimated growth results over 5-year projected will result in 94 million. The forecasted EPS at 28, growth rate estimated projected would be at roughly $2.10. So let's see where that takes us. Let's go to the next slide, please. Oh, here I just wanted to kind of pull out that management is strong in this club, in this company, and I wanted to do it via by way of comparing with the peers. So if you look at the top of each box, you have 11% for pre-tax profits, PTP, for VirTra. If you look at the industry and the peer groups, they're in the negative. So I just wanted to do the comparison there. Also under ROE, return on equity, we're at 10%. It's a little low, but it's doable. I know we like to see bigger numbers, but their return on equity is pretty good. But compared to the industry average, and again, the peer group, VTSI is doing well. Under debt to capital, very little debt. 18% here over the last 5 years. And then if you look at the recent quarter, the last quarter was 16.3%. A year ago was at 20.3. So I just want to see the drop there. So they're doing good with management over the PTP, the ROE, and the DTC. Next slide, please. Awesome. So now we're here at the valuation. For the high price and low price, I came in at, I used the average high PE at 12.8, which yielded the high price of 26.9. And I went with the recent market low at 3.7, and it gave me a forecasted low of 3.7. I said it backwards, but and then what it does is gives you an upside down ratio of 4.7 over 1, and it tells you there the buy status. Again, the lowest forecasted low price was $3.07, and the high was 26.90, and then the current price is at 7.8. That was as of Friday, the 2nd of August. Next slide, please. Okay, before I jump into here, I just want to share a couple of things that caught my attention with VTSI. Wanted to share that they are strong. They show a strong financial performance over. They have organic revenue, and they've had that since 2005. I mentioned earlier they have 22.4 million in cash, 11 million in shares outstanding, and then they have that 14 million in backlog. What that backlog is, they deal with a lot of U.S. government agencies, and if you know or if you don't know the process around acquisitions with U.S. governments, a lot of it is, how can I say it, in arrears, and it's coming. So that's what I kind of got out of that information that they shared, that they do have money on the table coming, but it's considered backlog. Wanted to also share some of their, again, some of the things that caught my attention. The characteristics that make VTSI simulators invaluable for research includes their accuracy and precision, effective data management, advanced analytical capabilities, reproducibility, user-friendly interface, being able to integrate with other systems, their robust security features, and comprehensive support and support documents. One of the things around that research that caught my attention in June 24, just recently in June, VTSI was approved for Department of Defense funding for more research projects. This approval came off the back of the support of the results from a recent study, independent study out by Ohio State University, where they found that the system accuracy the system accurately caught and captured shooting data, decision making, reaction time, and it was down. The reaction time was down to milliseconds. So I thought that was interesting. Why you think that was interesting? Glad you asked. Their simulators as research tools can lead to so much. They can lead to their being the use of the very first standardized performance scoring system for virtual reality ballistic training. So I thought that caught my attention. I just kind of wanted to bring that out. 12 states passed law 12 states passed law requiring de-escalation training since 2020. A solid majority of Americans approve of the de-escalation training. Therefore, I see this number doing nothing else but increasing, going from 12 states to more.
2 minutes, Cynthia, 2 minutes.
Thank you. And then those are the points I just kind of wanted to bring out that really caught my attention. But to summarize, VTSI is a small size growth company. They're well managed. They are I have VTSI as undervalued, trading below their 5-year high PE. They are, in my opinion, a candidate worth considering adding to your watch list to watch them, and or to buy if you're looking to add a small cap company to your portfolio. VTSI is a buy below $9.50 to satisfy that 15% turnaround. Again, right now it's in a buy zone. I said it before, the upside down ratio was 4 to 7.1, and you're looking at a projected return of 28.1 with the valuation that I put in. Again, please do your research, but consider buying or putting on your watch list. That's it. Thank you.
Thank you very much, Cynthia. Always glad to have you. And now we're going to bring in our newest presenter. Paul Ware-Dunn is going to be our 36th different presenter since we started almost 4 years ago. Our 23rd different presenter this year alone. And I think it's the 13th different club from this area to be presented. So glad to have you. And Paul, why don't you tell us all about FedEx Corporation and the stock to study for this month?
Thank you, Kevin. It's good to be here. And Cynthia, I liked your presentation. I might look at that stock.
Awesome, thank you.
So I got FedEx from the Better Investing August magazine stock to study. So if we can have the next slide, please. Thank you. This is really just a snapshot of the page in the magazine. And I found it very interesting in that FedEx is involved in trying to reduce expenses. And so I highlighted those. And can we go to the next page, please? Next slide. So I think we all know FedEx. It's been around since 1971. It started out as Federal Express. And it really started as, and I hadn't realized this, as an airline company. There really wasn't a lot of the ground services. I think UPS was already in operation by then, though I'm not sure. But it got rebranded to FedEx in 2000. Now it's a multinational conglomerate that's got it bought some companies. Yeah, I think it's Caliber System. Also a firm in Europe to expand it there, but it's focused on innovation and customer satisfaction. Next page. Next slide, sorry. So these are the sort of the challenges, and this is any of the companies in this industry. And if I got to figure out, I looked it up, I can't remember the industry, but it's UPS, Amazon Logistics, there are a few other ones in here, but these are some of the things that they face. I'm not going to read them all, but it's pretty fuel cost, supply chain disruptions, price wars. They can provide a number of challenges. Next slide, please. There's technology disruptions, the regulatory environment, also environmental impact. They're trying to go green. Next slide. This is a sort of a snapshot of FedEx. Talking about, this is before it got reorganized, but there was express, ground, freight, and other services. But they've collapsed their structure. It's now less organizations. They've taken. Let's go to the next slide. They've taken, please. They've combined FedEx Express, FedEx Ground, and FedEx Services into the Federal Express Corporation, and then they have FedEx Freight. And and in doing that, they're trying to reduce redundant services and save money. But they're involved in hopefully a 4.4 billion saving over 2 years. And as of the end of their fiscal year in May, they've achieved 1.8 billion in savings. And hopefully by the end of their fiscal year next year, it'll be 4.4. Can we go to the next slide, please? So compared to other industries in logistics, it's a dominant player. Really, FedEx and UPS make up a large portion of it. It's competitive edge, it's strong brand name recognition, it's innovative. Can we go to the next slide, please? As it compares to its peers, its sales, it was 7.9% last year, not quite as good as UPS, excuse me, JB Hunt, sorry, but better than UPS. These are the two big players. Recent quarter, it's positive percent change up, whereas the other members in the industry are negative. Can we have the next slide, please? So forecasted sales growth, I used value line. So I used, if I looked at what the data is saying, the past growth rate was 7.9%, but I used 4.5% from value line. Next slide, please. And I also used the value line estimate for earnings of 6.5%. The next slide, please. For the high price, forecast high price, I took out the 2019 PE because I thought it was sort of one of an outlier, and got 17.8 as so I'd use that as the average high PE forecast, and so it forecasted a high price of 419. Can I have the next slide, please? For the low price, I just decided to use 80% of the current price, which I think at this time was 305. So I just used 244. Next slide, please. So if you look at, if I can read looked at the zoning, the price, the 305 price is in the middle of the hold range. It's at this time, this was in July, the Morningstar felt that it was at a premium, 17% premium. They felt a fair price of 261 was what you should try to get. It was at 2 stars. Had an upside down ratio of 1.9. It's interesting. I ran the SSG today, and of course it's excuse me. It's now today's close price I think was 292. Changes things. If we can go to the, please. Determine the 5-year potential. I used 26.6 and got a total return of 8%. Well, will not double your money over the next 5 years. Can we go to the next slide, please? So my conclusion, it's a large cap for 10 billion. I like it's in the middle of this cost reduction, say 4.4 billion. FedEx is slightly overvalued based on the 305 price. Morningstar, it's gone from 3 stars because it's, you know, it's more valued. So the to get a % return, you need to get $185. It has a narrow moat. It's very competitive industry, and I'd recommend putting it on a watch list as an industrial sector candidate. Is there a next slide? I think there is. That's it for me.
Well, thank you very much, Paul. And now that you've completed a presentation, Cheryl will be able to give you the secret handshake that we have for all of us that have done presentations. So you're going to have to meet up with Cheryl at some point to be able to get to the laurels, the wreath, the laurel, and the handshake. So glad to have you, and thank you very much. Next, we're going to be looking at 2 stocks in the SSG Plus. The first one will be the undervalued feature, and I'm going to do that with GAP. And then coming in as our cleanup hitter is going to be Kent DeYoung, formerly of the Maryland chapter and now in the Alabama Emerald Coast chapter. And he's going to be talking about GRVY. So let's get into and let's look at the first of these 2 stocks. So I have GAP, and again, it's in the New York Stock Exchange. And again, it was the undervalued feature. Most of us have heard of GAP, so I don't have to say much more about it. Let's go on to the next slide. So again, it's the undervalued feature. And as you can see here, what I sort of was struck by is I always listen to what sort of the Editorial Advisory and Security Review Committee says. And there's usually a paragraph where they talk about it. And they think that this new CEO, Richard Dixon, is really sort of helping to change things and getting things moving in the right direction. He came in August of last year, so he's just been in it for a year. But I've found the article always very helpful when I look at the stock and I sometimes wonder what's going on. Let's go on to the next slide. And if you look at the visual analysis, these lines are anything but up, straight, and parallel. In fact, if anything, these lines look like the polygraph of a liar. And if we sit there, one of my movies that I've liked over the years is Edge of Tomorrow, and the late Bill Paxton was playing a master sergeant and said, "What the hell were you thinking?" And when I look at those lines, normally I would just say, "Let's get out of here." Now, look in the lower left-hand side where you have the Editorial Advisory and Security Review Committee. There are the people, there's 8 of them on there. 7 of them have a CFA or a designation, which means they're Chartered Financial Analysts, which means they are really fundamental investors that look deep into the company to make sure they're doing it. They're not day traders. They're really trying to see if the business is worthwhile. And they think that this one has an opportunity. Remember, the undervalued feature is supposed to grow by 15% over the next 18 months or so. And when this was presented, when they presented, it was at 2055 in May. And to be able to, now it's at 2170 as of Friday. It went down another 60 cents today. But if you just had to get to 15% and they include that with dividends, you'd only have to get to $24. So it's not that much of a jump to be able to get there. But again, you look at this line and you're like, oh my God, I'd want to run away from this. So let's go to the next slide. And the GAP is what's called a turnaround company. And if you don't know what a turnaround company is, Again, make sure to download these slides. I have 3 hyperlinks to tell you different aspects of investing in turnarounds. You know, what we're really looking for is, do they have enough financial strength or health to be able to sort of make it out of this downturn? And then do they have a plan for getting out of it, as Cy Lynch was talking about with Starbucks in the growth stock column? And do they have new leadership that can implement it? And do they have a catalyst for change? If you're a beginner, if you're a newcomer, I would stay away from this right away. Don't even bother. In fact, if you're a veteran and this doesn't hit your threshold for quality, then sure, walk away. However, if you're a veteran and you can sort of have a stomach to invest in these things, there's a lot of good undervalued features that have an opportunity to make some money with. So let's see if we can dissect this thing and sort of figure out what the editorial and security review committee was thinking about it and how we can sort of come up with it. Let's go to the next slide. So again, here's sort of the background. Most of us know some of the basics of it. It's out of San Francisco. The family that started it, Donald has passed away, but Donald and Doris Fisher, their family still has a major interest. 2 of their family members are on the board, and they still have a very large percentage, something like 30 or 40% of the shares of the stock. Um, the new CEO, like I said, came in August of last year. And they've really sort of trimmed down their employees over the last decade. But if you look at some of the metrics that we tend to use, the financial health grade, the manifest quality, value line financial strength, CFRA, all of them are about average. I mean, the quality ranking in manifest is really low and the core score is low. And Morningstar says this doesn't have an economic moat, which is quite common for retail apparel retail companies. But overall, there's nothing that says, oh yeah, this is super, super great. So we're sort of treading on thin ice here. Let's go to the next slide. So I also like to look at the CFRA reports if it has an analyst covering it. The second page is really a great summary of what you could find if you were to read all the different reports that they file with the SEC. So you can see that 80% of their sales are off mall. In other words, they're not in malls. 87% of their sales are in the US. They're really pulling away from stuff outside of that and creating new partnerships for non-US US companies. You can see the breakdown of the 4 major brands that they have there. They're looking for long-term growth somewhere in the low to middle single digits, and they've been closing the underperforming Gap and Banana Republic stores and increasing the Athletica and the Old Navy stores. But the financial metrics, if you look at it, I didn't put them all in there, but they were all pretty mediocre to negative. And if you use a current ratio, a liquidity measure, that has gone down, which is not what you want to have. So overall, it's just sort of like yuck. Let's keep going. Next slide. So here are the 4 brands that are the main part of this, and they've sold off a couple of them since the pandemic. But 22% of their sales comes from Gap, 55% in Old Navy, 13 in Banana Republic, and 10 in Athletic. As you can see, Gap is their flagship store where they sell a lot of high quality products. Old Navy is their value chain. Banana Republic is their upscale retailers. And Athletica is one that's focusing on women athletic apparel, sort of look at like Lululemon. And again, you can see they're manufacturing. They're manufacturing a lot of stuff either in Vietnam or Indonesia. I don't know how much I couldn't find. That came from the BI magazine. I looked around and I couldn't find how much they have being made in China or other places around the world and how much is made here. Most of it, I guess, is probably over somewhere in Asia. Next slide, please. So the business model, as you can see, most of us, and this is maybe a little bit hard to read, this is from Statistica, but if you look at those gaps, those things over on the far, far right of each of the awareness, popularity, usage, loyalty, and buzz, the ones that have the greatest awareness are in people that are either baby boomers or Generation X, so the older audience. So that's one of the problems they're running into. This was a really cool and hip company 50, 60 years ago. How are they going to keep themselves relevant when the average age of most of the retail shoppers is somewhere in the late 20s to early 30s? So being with millennials, or what they also call the Gen Zs, which are people from 95 to about 2010 or 12, are, what are they doing and how are they reaching them? And this is where they're really sort of changing things. Next slide. So looking at some of the competitors, they're all over the map. Better Investing gives me Ross Stores, TJ Maxx, and IDEXI, I have no idea who that company is. But looking at Manifest, I can see some that look pretty good. You can see at CFRA, they had some that looked all right. And then the Morningstar report had some. I looked at the SEC filings, and the ones that they talked about were Abercrombie and Fitch, that's AFN. AEO is American Eagle Outfitters. Urban is Urban Outfitters, and then some of the others are either overseas or they're privately held. The other thing that they were saying in their SEC filings is that they view Walmart, WMT, and Target, TGT, as expanding their private label offerings that will also be a competition for them. So this is a very, very competitive environment. Next slide.
5 minutes, Kevin, 5 minutes.
Sure. So if we look at the retail apparel industry, it's very competitive, highly competitive. You're going to have low margins. You'll see that when we look at 2A. There's no moats with any of them. Our audience is a lot younger, so they really have to be working with the metaverse and taking a look at it. There's ways that you can actually try on digital garments to be able to sit there and do your shopping online. Most of us are probably in this audience can't even imagine buying stuff by trying a digital garment on. But there's been a huge seismic change in the post-pandemic in terms of how you do shopping preferences, and they're trying to be able to reset themselves for that area. Next slide. So at the heart of all of this is the CEO. That's him right there. That's Richard Dixon. He actually is a graduate of the Smith School of Business here at University of Maryland, College Park. He's gone on to other places as well. You can see the PR release on him. I like sometimes when I can find Jim Cramer doing an interview. It's only about 7 or 8 minutes. I like to hear what the person has to say. He's very compelling. There's also sort of a TED style talk that was through a group called the Business of Fashion that was about 20 minutes long. That's also very good. And he was at the heart of Barbie and the revival of it. So the Barbie movie and stuff, he's worked in the movie industry and being able to promote stuff as well as being able to revive brands and stuff like that. So he's well positioned for this. Next slide. So how are they going to turn things around? They're focusing on their two core brands, the Old Navy and Athletica. They're also doing, their digital transformation in terms of being able to reach people. They, he's brought in a new technology officer and a new creative director to sort of help drive things. George Nicholson says our founder always talks about how it takes about 2 years to get a new team in place. He wasn't the only one to say that. A lot of others say that's a way to look at it. And as from the article, it says they're trying to do more cost cutting. They're laying off people from their headquarters, and they're trying to be leaner. They've made some really good changes that look somewhat promising. Next slide. So here's the competitors, and if we look at the stuff with that, I went with Urban Outfitters, Abercrombie and Fitch, and American Eagle. Again, these pre-tax profit margins are all anemic. That's what you expect in the retail field. Value Line is projecting going forward that they can get a margin that would be up around 6%. So that's right around the industry average where they're lagging right now. Next slide. The historic
2 minutes,
return
Kevin,
on equity.
2 minutes.
Thank you. The historic return on equity, generally you like to see stuff above 15. This is the best of the bunch, but they're all really kind of low and the like. So they're, again, part of that is because they don't get really big margins and they're, just haven't generated stuff like that. Next slide. The debt to capital is, they're the highest of them all, so that's not really good, but they are coming down, not as fast as Abercrombie and Fitch, or as Urban Outfitters looks like they're the best of the bunch out of this one. Next slide. So I went with, you see my judgments there. I cut out some of the earlier years and some of the stuff that was sort of right post-pandemic. I'm going with, forecast sales of 2 and 7%. Why you're doing that when you see those historic numbers? Look at the quarterly figures. They're up really, really well. If you look at the trend down in the lower left-hand side for evaluate management, that's all good. And again, if you look at my projection on the 7% for earnings, it's still below where the analysts in that last dot there of the 4 open circles in the projection line, that's the value line number. So I'm below the value line number and I'm still going out. So I think that there's a lot of opportunity. And again, remember, this is a company that doubled since this new CEO came on. They were selling at about $10 a share. Next slide.
1 minute, Kevin, 1 minute.
Thank you. So we have the historic PEs. I went over 10 years. You can see the current PE as of Friday was 12.1. It's pretty much in that range. I think that current trailing 12 month that I have in pink highlighted looks like the more realistic numbers to go with. Next slide. I went with the forecasted high and low prices. I have a forecasted high of 20 and 9. Before all the changes of the last couple of days with the stock market going down, I had this as a tweener, sort of right between a buy and a hold. It's now may have moved into a buy based on what's been happening over the last couple of days in the market. Next slide. So upside downside is 3.7. You can see where it fits in there. Next slide. 5-year potential, the buy on a 3-to-1 upside downside ratio with 15% return is 23. It was at 2170 on Friday, and those are all not too surprising for a company like this. Next slide. It should be my final. Oh, here's my SWOT analysis, so you can sort of see. You can take a look at this a little bit later. I'm running out of time here. Next slide. Here's my conclusion. It's a medium slow growth company. It struggled with some of the management. Most of this is really predicated on what the new CEO does. If you like what he's doing, if you read some of the stuff that's about him, I came away quite impressed with him. The metrics are starting to get better, but they're still kind of lagging. If you look historical data, it's overvalued. If you look at the projected data, it's undervalued. I have it as a buy up to $23, and I think it can be able to do that. It's something to be able to consider taking a look at. Next slide. Kent, over to you.
All righty. Good evening, everyone. As Kevin said, I'm Kent DeYoung, checking in from the Alabama Emerald Coast chapter. Tonight, I'm going to be talking about GRVY Company Limited. Next slide, please. I found this company in a couple of places. First on the BI roster of quality, and next slide, please. It showed up again on the BI value screen. There were lots of other companies of interest to me that maybe after further digging will yield a winner. I suggest you check out the options available for study from the A-list stocks, the quality and dividend yield stocks, and the BI ticker heat map. There are several companies that I saw that were yielding some amazing results. And remember to do your own research. Next slide, please. So GRVY Company Limited is a small-sized company with revenues less than $1 billion in 2023 and just a little over $300 million in 2022. That 9-year growth rate is nearly 40% for the revenue, and as you can see, pretty high for the earnings per share and pre-tax profit. Visually, I'm kind of wondering, does that bow have an arrow for the long and high flight, or is that quiver empty? So my cursory judgment, next slide please, is that the company is worth studying to learn and to see if money can be made. Next slide please. BI's information on GRVY Company Limited indicates the company is a video game producer based in South Korea. The company's principal product, Ragnarok Online, provides most of the gravy for the company. You might guess I'm enamored with the ticker symbol. GRVY also provides animation services and merchandise, which augment the video game revenues, and these revenues are listed in the SEC annual report under other revenues. Next slide, please. These next 2 slides are for your information to show the variety of products. Next slide, please. So turns out GRVY has one core competency, and that's video games, both educational and role-playing games. Next slide, please. The best-selling game, Ragnarok, has multiple incarnations and is found online and on multiple platforms, you think smartphones. One key takeaway I saw is that entertainment and role-playing games were much more lucrative than the educational games. Next slide, please. So, why would we choose Gravity for analysis? I chose Gravity because a BI screen indicated it might be a good small company to investigate. A cursory analysis of the 9-year data trail, Gravity looked like a winner. The company's choice of ticker symbol, like I said, was fun. But I chose Gravity because I was curious also how I might analyze a small Korean company. Because, next slide, please. It seems there's only one industry analysis looking at Gravity, and it was an automated review of the company. So no humans were involved in the making of these reviews, except for me and our BI colleagues. Next slide, please. I really appreciate the sanity checks from the analyst at Better Investing. That would be us. The crowdsourcing of estimates can be quite helpful if, next slide, there's a good number of analysts. Fortunately, there are some folks who are looking at this company. Yay. Next slide, please. So let's investigate how Gravity could fit into the rest of the world. And let's move on to the next slide. Worldwide, today, there are a lot of folks playing video games, most of whom are from the Asia Pacific region. As of this afternoon, there are less than 337 million people in the United States. Think about that as we look at the revenues for the video game industry. Next slide, please. So 337 million people, and we're making up the second largest second largest revenue source for video games. China is the largest. According to the company communications, just before the end of Q1 2024, Gravity released a new version of Ragnarok Online for the Chinese market alone. Next slide, please. So now it's time for we geeks to rumble. Next slide, please. If you'll recall, as you can see, Gravity is a small company, though its revenues were growing quite rapidly before the pandemic. The first 4 years of COVID era, 2019 to 2022, revenues were pretty flat, with revenues sticking around $300 million, or stuck around $300 million. The last 5 years provided some consistent revenues and earnings per share growth data. 2023 provided a major jump in revenues, pre-tax profit, and earnings per share, with revenues breaking out to $555 million. But now for the scary part. Q1 2024 was pretty bleak, with year-over-year revenues, pre-tax profit, and earnings per share all dropping by more than 30%. Prior to COVID pandemic, Gravity was well on its way to creating $1 billion in revenue, and now it's growing really slowly. So I'm wondering, is the quiver out of arrows? Next slide, please. So I'd like to eliminate the explosive growth and focus on the most recent years and see what the company managers have been doing for the company shareholders. Next slide, please. So the next 5 years are yielding a more sustainable revenue growth, 13%. Once we discounted the earlier years' explosive growth. Next slide, please. The evaluation of manager skill indicate that profit margin, return on equity, and debt are each within the parameters recommended by Better Investing, and in some cases way better than the company's peers, but in all cases they were still better than their peers. Next slide, please. For future growth, I estimated the potential sales growth and then leveraged the preferred procedure, my favorite analysis tool of choice. The company's managers opening that new line of business in China in the end of March, and given that Chinese market, it could be a huge boost to revenues. On the other hand, some of the scuttlebutt out there is indicating that games Gravity is selling are old and out of date, And some folks are saying maybe you call them uninspiring. However, there may be some significant number of people in their targeted markets that have yet to see Ragnarok online. Being the conservative person I am, I opt for a 12% growth rate, all things being equal. However, the company expanding into China has challenges. Their expansion is via a surrogate company based in China, which raises concerns about intellectual property protection given the Chinese Communist Party's history. Because of the scuttlebutt regarding the aging of the current games and IP protection, next slide, please. I opted for a more conservative revenue estimate of 11%. And with that growth rate, the preferred procedure yields an EPS growth rate of 9.2%, which is in line with our guiding stars and sanity check, the analysts of better investing. Next slide, please. The objective of identifying a good quality company has been hurdled. It's now time to determine whether GRVY is selling at a good price. After eliminating outliers, we calculate a high and low average PE, which we could use to estimate the high and low prices if our judgment indicates sound reasoning. And you can see that in the green and red boxes. Also note that I considered the most current year's high and low PE, as well as the trailing 12 months high and low PE. And especially if these are being diminished below that 5-year average. And currently investors are indicating they want to pay less than $1 of earnings, or pay less for $1 of earnings than the 5-year average. So we need to be careful of our judgment. And that's you'll see in the orange boxes. Next slide, please. Here you can see my forecast for the high and low prices. I use the orange boxes. And I built in a little more conservatism using that price to earnings ratio in the orange boxes because of the risk of such of a small company. And then with the updated quarterly report this week, should be coming out on Thursday, I'll be able to determine if I need to adjust my PE estimates. I could also have built some more conservatism by lowering the earnings per share growth rate. Next slide, please. Finally, we see the current price as of Friday falls into the upper buy zone close to the hold range. After today's market sell-off, the price is even lower, and that made GRVY's upside-downside ratio even more delectable and the potential price appreciation looking more appetizing. But should we study GRVY? Next slide, please. There are some potential hazards, some of which are with the company and some of which are associated with the way the company is making its shares available in the US. Currently, there is one major shareholder in South Korea owning nearly 60% of the company stock, and that's a parent company. That makes for a company with fewer trading options and a lot less liquidity. Given the fall of revenues in Q1 and the cycle of this company, I am curious what happened with the second quarter, which ended in June. And later this week, we should know. Next slide, please. I think GRVY Company Limited has a potential to grow quite a bit. It's a company I would consider for the more adventurous. It is worth studying as one can learn a lot about how foreign countries' securities differ from the US-based securities. And I recommend looking at this company after the earnings come out later this week and see how well the engagement with China is proceeding. Thanks for your attention. Next slide, please. All right, so I've also put a whole lot of background information in there. And if you skip ahead to slide 110, Cheryl, then we can move on with the rest of the presentations. And Kevin, back to you.
Okay. So yeah, we went through these kind of fast. Again, here's another recommendation to please download the slide deck. Again, you can share that with people in your club or friends or whatever you want, and also the SSGs. So we went through these things really kind of quickly, but we sort of like to ask all of our presenters, how this sort of fits into the life cycle for all of the companies that are there. So let's go to the next slide. And this is the life cycle. You can see this image is used a lot in both the digital handbook, the old take stock book, and it comes from T. Rowe Price, where he says earnings for most corporations pass through a life cycle in which they have a growth, maturity, and decadence. So we're going to ask all of our presenters, and I'm going to start with me in terms of gap. GPS, I have it on the mature growth towards the stabilizing. These are low growth companies. And again, a company like this that's in the undervalued feature, they even say in the article that this isn't necessarily a long-term hold. But there's a lot of good things to take a look at it. We're not doing this as a day trader. We're not trying to get in and out. You're still looking to hold it for a year or more. And the fact is I think there's some encouraging things because it's been beaten down, and there's some encouraging signs that they're making some good changes to the business. And that's the reason I put it down towards the end of the mature growth. Kent, let's go to you and tell us why you have gravity in that location.
Well, I think that we have set past the explosive growth. If you look at the SSG, you see things were pretty flat. Even flat growing at 13% is still a pretty good growth rate for a small size company. I'm not sure I would put it in mature growth at this point, but I'm still would be surprised if it ever goes back to that explosive growth phase again. So that's why we've got it there right at the boundary.
Okay, Cynthia, tell us why you put that location for VTSI.
Awesome. So I really like the underlying return on capital that this company has. This company is has very profitable initiatives that they can continue to invest in. I like that when I went to look for their competitors, that it wasn't a lot in that field actually producing those type of that technology, that hands-on, that realistic simulators and the products that they have. So I like them for that reason, and the fact that their key characteristics around their simulators bring a great wealth of research, data, information, and how efficient and precise it is.
Okay, thank you. And Paul, tell us why you picked that location for FedEx.
So FedEx is a large cap, over 10 billion in sales. So there's a lot of inertia with it. Excuse me. It's in a very competitive industry. Has a narrow moat. I just don't see this. I see it in a sort of the mature stage. It's just going to plod along. Hopefully, find some cost savings, and continue to grow, but slowly.
Very, very good. All right, let's go to the next slide. We've now been chatting for a better part of an hour. Cheryl, if you can be able to put up the poll. Again, we're not asking you to pick which one you want to buy, but which one interests you enough that you'd want to do your own study on it. So go ahead and release a poll. And all of you that are in the audience get a chance to be able to vote and see how we're doing. Again, we have a really nice crowd tonight. So thanks to all of you for showing up. We got, let's see, just about 50% of the people jumping in there. We have a runaway. Right now it's a runaway. Will someone be able to catch? We won't tell you who it is. Okay, we're just short of 60%. Can we get up over 70? 65, 68. Now the votes are coming in. The late votes from California and Hawaii are coming in. 70%. Can we get a little bit higher? One or two more votes? Let me see if we can get one more vote. I think that's it. Go ahead and close it. And share that so everyone can be able to see who our big winner is. Cynthia, you win. So very, very good. Thanks for all participating. Now the next thing is we sort of like to open up for questions. And Cynthia, I don't know if you know, but the person who recommended this at Bink is actually here in the audience and listen to your presentation. So Betsy, do you want to be able to ask her any questions? I can unmute you so you can be able to talk. Hold on.
Awesome.
Let me find Betsy. I'm unmuting you, Betsy. So there you are. Go ahead. Talk with her.
Hi there. So I really enjoyed your presentation. It's you know, we went so quickly there at the BI Gals Talk Stock with respect to these, you know, companies that we recommended, and I kind of told them that my, you know, my forte was going to be, or my, you know, the stocks that I would pick would be the small stocks. So anyway, I think I just kind of reeled a whole bunch of them out there. So it's nice to see you pick up VirTra and you know, do a nice presentation on it. And I think you mentioned that someone else is looking at Powell, which is another one of the ones that I recommended or suggested to look at.
Yeah, I truly enjoyed the presentation. So I guess I'm gonna flip it, Kevin. I'm gonna ask Betsy, did I try to get the backlog right? That's what I was trying to better understand when I was diving into it. I did see about the government acquisitions and all of that, and how it's, you know, how it takes time, anywhere from 6 months to a year to actually come to pass, and that revenue hits. So like the first quarter this year, they were down, and that's what they were saying was the reason why.
Yeah, I think government contracts, I think the government is a slow payer.
Yeah.
But, you know, you've done more research at this point than I have. I was actually looking at this stock to present. So the Rocky Mountain chapter has our model club meets in the middle of September, and you can go to our chapter website, either on the Better Investing or on RM chapter for Rocky Mountain, rmchapter.org, and sign up. And I was actually thinking about doing VirTra for that presentation because I'm doing the stock study, but I'm going to do Progeny instead, which is another company that I mentioned at bank.
Yeah,
But,
I remember that.
No, I think you did a great job, and you know what attracted me is just the world has gotten so dangerous that what really attracted me out here in the West was their training of you know, security people and police and all that other stuff, and how to handle these situations, and that simulator that they have, that they're the only one that has a 300-degree simulator.
Yeah,
So,
and they go up. Yeah, that's awesome too. I mean, they go up from the flat 100 to the 180, then they make that 300. So it was very intriguing to me when you first mentioned it. So I tremendously dove into it, especially, like I said, right now we know that 12 states actually passed the de-escalation. So we're looking at, it can only go higher. I mean, that's what everyone's concern is around arms, but we want to keep our arms, but we want to still continue to have the U.S. to be safe. So it really was intriguing. So thank you for that.
Yeah, and it's how to de-escalate a situation. You know,
yeah.
So that's good news too. So anyway, I was really happy to see that you were interested. You never know when you do these things at bank, you know, what interests you is gonna fall flat on the ears of the audience. So yeah, that's great, and I'm glad to see the audience was interested too with that 69% vote for it.
Awesome.
So thank you so much again for letting me come.
And Betsy, just to let you know, the Powell, that's going to be in my club, the Montgomery County, Maryland Model Investment Club, and the person who presented it, or is going to present it, she was also at bank, and she was in your class listening to it as well.
Cool. Yeah, I think they've got.
You're a trendsetter all the way out here on the East Coast.
Well, like I say, I'm really interested in these small stocks, and that's what we focus on our model club out here at the Rocky Mountain chapter. We focus on the small and mid cap stocks. So, and I'm also presenting, just to make up a little plug, I'm also presenting at the Puget Sound Investor Education Day. And I'm going to be doing something that I don't think anybody else has ever done before. I've never heard it before, but there was something that was, pardon me, no, I started off with small stocks, but now it kind of led me down a rabbit hole. And so it led me to something called the size effect, which was discovered by a guy named Rolf Banz, B-A-N-Z, in 1981. And it shows that he found empirical evidence of a correlation between the size of a company and its returns, and particularly small stocks. So put it on your calendar to come to the Puget Sound Investor Education Day if you'd like to learn more.
And for those of you that are doing it, you'll be able to see it on page 51 of your Better Investing magazine. Look at the Puget Sound, the Seattle area, and take a look at it. So thank you very much.
It's, yeah, I had to change, I kind of changed the title on those guys back there in Puget Sound. I don't think they're very happy with me. But when I went down this rabbit hole, I thought, oh, you know, this is so much more interesting. Nobody's ever done anything like this before and talked about this. So I'm going to get them a new summary and a new title, and so it'll all change. But so you guys heard it here first.
Very, very good. Well, thank you. All right, Rob, I know you're in the audience. We were talking about it. Do you have any comments about, here, let me unmute you. We were talking a little bit about the gap. And so what kind of I have you unmuted, so you should be able to unmute yourself. Hit the microphone icon. There you go.
You are unmuted.
There you are.
Okay.
So
you can hear me?
Yes, we can. So
All
what's,
right.
what's your take on
a couple of points that when I was looking at it in 2020 and 2022 were two bad years financially.
Just a moment, Rob. Cheryl, can you move back to my presentation? I think the visual analysis is going to be like on page 52 or 53. So if you just hit 5.3, it should take us right back to that slide deck, that part in the slide deck. Go ahead, Rob. Back to you.
So if you go to their annual reports, what happened in those years, 2020 was COVID. So we all remember stores closing and then reopening very gradually with lots of new controls. And so that was a black swan event for all of retail. That can explain that. 2022, the company says, is due to inventory issues primarily, and restructuring their outlets, going to franchises on some of their stores. So, but it seems to me that retail always has inventory issues. That must be taught in business school, I would think, so that it it just seems like a coverall. I don't know if you have any viewpoint on that, Kevin.
Yeah, no, I think you're right. Is it retail? And Cheryl, we still have the poll up here. So can you close this and go over to slide 54, please? So everyone can see it. So yeah, you're right. The one-time example of, go up one more slide, slide 54.
Okay.
And this is the overall visual analysis that it was just like, yeah. And I took out the bad years of 20 and 22, and that black swan event that you're talking about is 21, because that's the fiscal years that ends, and you're right. One of the slides that was showing all the activity in terms of sales, both for luxury and non-luxury by continent, and the U.S. was just way above in this year, and then they've been down less than Europe and Asia since then, because we all were sitting at home and buying stuff. So yeah, you're right. One-time event there. Inventory is always going to be tough with the retail store. And the other thing you run into is that fashion, if you're not right at the cusp of fashion, whatever you look at may be no longer good 6 months later, 2 months later. So they're constantly trying to take a look at those things to make sure it works. So yes, this is a tough one. I'm not a slave to fashion. I don't go into I know Gap and I know all those other stores. I've been in all of them outside of the Athletica, but the rest of them, it's just like, that's not my bailiwick. but I really found it
Yeah.
interesting what they're doing in terms of being able to reach out to the next generation, what they call the Gen Zs, people from like 97 to 2012, and how they're able to reach them at their level, and how they're trying to be able to bring them in to this. And the Athletica is something that's growing. It could be sort of a mini Lululemon. For people that look at that, it really is sort of a real direct competitor to them. And again, the other one that they're doing really well with is Old Navy, which is their sort of value bin. Um, so yeah, um, it does look like every,
I noticed while I was watching the Olympics, Athletica has got a lot of advertising on there, and they're using Simone Biles as their person advertising the place. So,
absolutely.
you know, in on a current trend.
Yeah, and so they've done that with several. I put it in the slides. There's a lot of. I knew Simone Biles was one of the people that they had in there. There's a couple others as well. They're really trying to reach out into. Gap, if anything, has sort of been known as sort of an overwhelmingly white business, but obviously as the demographics of the country change and the like, they're really trying to sort of address that and bring in other people and other influencers and being able to reach people in that environment that you and I would still think of going to the mall to be able to buy your stuff. And mall sales are just not there anymore. So keep that in mind. People, if they do have mall sales, it may be you make the initial order online. In fact, I think they're number one or number two in terms of apparel retail online sales in the country. So, again, the way that we think of things are a lot different, and that's the reason why they've been closing some of their underperforming stores. Very interesting in terms of that. But yeah, this is sort of a leap of faith, because if you look at, like I said, this is a classic turnaround, and I recommend if people want to understand turnarounds more, look at those links. I always like the commentary that Peter Lynch has on One Up on Wall Street on turnarounds. He made some really good money with it. There's an opportunity for us to be able to do it here, and it doesn't take that much to go up there. Like I said, everything is almost really predicated on the CEO. And again, I don't know the industry, but what I heard and the way he discussed it with people both in the business of finance TED Talk that he had, as well as the stuff with Kramer, I came away going, this guy is really good. Now, whether that turns out to be true or not, I don't know, but I can see where he would, why he's in this position and why he's doing. And if he does what he's done with Barbie and Mattel over here, it's going to be really easy to see this thing really jumping. But a lot of
And
the
my other,
don't look good.
my
Go ahead.
okay, other point or a question: does a short percentage of 20% afloat, does that scare you away?
Yeah, it's kind of interesting. I put in the. I think if we go up one more slide, I think I have the insiders, sort of my background. Go to slide 55, I think it is. Go one more, 56, it could be. Yeah, so here I took the insiders own 8.1 and the institutions own 40. That comes straight from Better Investing. But if you look at something like Yahoo Finance, they say something like 47% is owned by insiders. And that's because about 40% of this company is still owned by the Fisher family. So it depends on how you sort of consider them. So I think if you look at like Yahoo Finance with insiders and institutions, yeah, there really isn't that much available for sale. You're right. It's the float is really, really low.
Well, my point was a short percentage. I tend to stay. If it's 2 or 3%, that doesn't bother me. I see 20%. That's a stay away.
Yeah. And I don't use it as a metric. I know other people do, as sort of a way, particularly when there isn't a lot of float, to be able to see that. So yeah, I know there's methodologies that people use that when they see that short sale setup that they want to walk away from it. And again, I have this as sort of a tweener, even though my SSG shows this as a buy. again, the financial health grades and the financial strength, they're all kind of average. So again, and the visual analysis would be a runaway. So this, I can see why, this was not the number one pick for tonight, because again, there's a lot of questions. I'm basing this more on what the CFA members of the editorial and review committee liked about it, and then my own reading of it. But I have no problem with people saying, nope, not for this one. It's just too many questions. I mean, the industry is fickle. There's not a moat with it. The financial health grades are just average. They're not horrible. And you're right with the short sales and not a big float. It could tumble, and it could also go up right away. The best thing is that at the end of this month will be their next earnings announcement, so you can be able to see how it is and see how it's performed. And if you like it, maybe you'll say, yes, we're ready for this. Or you wait until this new CEO has a full 2 years, so a year from now, see if it still interests you. But again, I don't look at this as a long-term hold. I think that this is a mature growth company that's going in there. And, you could be able to make a little bit of money off of this in a short amount of time. By short, I mean still over a year. I'm not looking to day trade in this, but I still think there's some opportunities there. Anything else?
I just wanted to point out, as someone who's worked with the budget for the government, to be a little concerned when a majority of a company is through federal contracts, because especially recently the Congress has been kind of stingy at handing out the money, doing continuing resolutions one after another. So if you look at infrastructure, for example, they've been really stingy with giving it out there. But just a thought.
Okay, point taken.
We did have a question in there from Amy, and she was asking about, can we explain the float in the short sale? I can tell you the float is what's available that isn't held by institutions or insiders. Whatever's left over is the float. I recommend, and what I use a lot is Investopedia. And if you just search under Investopedia and float, you'll be able to see that. Rob, if you still have your microphone unmuted, you may be able to explain short sale a little bit better, because I can't.
Thanks. No, thanks. I still haven't figured it out for myself. I don't see what what you do is you borrow, people who own the stock, you borrow from them, and you're betting that the price is going to go down, and you pay the people who own it a premium to have to be able to work with their shares. But the next part I don't understand. If it goes down, that means eventually I have to buy it on the prospect it's going to go up. So, I haven't quite figured out how to do it, and I don't do it.
Yeah. Amy, just another thing. Again, I like short sale. I would look at Investopedia and some other things in there. But basically what it is that there's some people that are more momentum traders, sort of like Investor Business Daily and a lot of other stuff. Momentum means they sort of go with whatever the flow of the market is. They'll look at things like how much a short sale is, what percentage of people have put in contracts for being able to short a particular stock. I'm at the outer depths of my knowledge on this one, but I do know that there are people that use that as a metric, that if they see that short sale percentage being really high, you can look at Yahoo Finance. They'll show you a percentage on the stock that shows you that, to take a look at it. I don't know what the metrics are in terms of what's too much. Maybe someone in the audience that knows that a little bit better will help. But the rest is, I see you said, okay, you understood that. But anyway, hopefully that helps. Anyone else have a question, or they want to raise their hand in the audience and we'll bring you out? Looks like that's it. Let's go up to, I think we're back to like slide 112. All right, let's go on from here. So here's how you can be able to reach us and the like. And there's a picture of many of us that were at Bink. Cynthia's there, Cheryl's there, I'm here. Kent wasn't too cool for school. He wasn't in the photo. But all the rest of them, these are people that have helped do our presentations over the time. And we thank all of you for there. If you need to reach either the Maryland chapter, DC chapter, there's there. If you want to reach us at digging into the BI in this webinar, there's a Gmail account in the upper left. Next slide. Here's how you can be able to join our mailing list. You don't have to be a member of the DC chapter. You don't even have to be a member of BI. If you click on up at the top there, where I have in the blue background, betterinvesting.org/chapters/DC-regional, you can be able to get there, and we won't inundate you. In fact, our person who runs our Interspire, the blast emails, she's on the audience here, and she does a great job of keeping things going for us. We thank you, Carol. Next slide. Kent, this is you.
Kent may have left. He said he had to leave.
Then go ahead.
So,
you take it.
All righty. Well, both Maryland and the DC regional chapters are run entirely by volunteers. None of us are paid for our effort here, but they're the heartbeat of better investing. We need volunteers to keep things going. So if you're, at all interested or want to find out what it's all about, volunteer for your local chapter. You can learn new skills, hone your investment skills, help educate others. There's just a myriad of things. And also you can be on the receiving line in terms of complimentary subscriptions to the online data feed, and also get a cheaper rate to Bink. So please, show up and help your chapter to put on programs like this.
Very much so. And I also saw another question in here I missed, but Steve Emmerich, if I'm saying your name correctly, I know he's from the heart of Illinois. If you want to tell us about, I'm going to unmute you. If you want to be able to tell us about the event that you guys run, go ahead.
Well, thank you, Kevin.
And
we
is
have
it
a little
Emmerich?
program.
Am I saying it correctly, Emmerich?
Emmerich, it's a hard K.
Okay.
Yep. But thank you again. We each Wednesday morning at 8 a.m. Central, we call it a Heart of Illinois chapter Wednesday morning breakfast club. And it's volunteers like yourself and all the folks that are with you, and people from all over the country join in, and we talk about stuff. We have a short program, but most of it is just conversation. We may pull out a couple of companies, some of which you talked about tonight. We may have to bring those up, but you can find us at the Heart of Illinois chapter webpage. If you go into Better Investing and look at your chapter and then other chapters in Illinois, it's the Heart of Illinois chapter, and it's on the very top list of the events. So thank you.
Thank you, Steve. Okay, and so here's the stuff we're going to be looking at next month. And again, the first Monday of the month is Labor Day, so we won't be meeting there. We'll do it on the second Monday. And so we have the stock to study. I'm going to butcher that name. Amphastar Pharmaceuticals. We're also going to do Medtronic, which is the undervalued feature. And then Lear Corporation and Super Microcomputers is the other one as well. And we do have openings in October, November, and December. So if you're from the Maryland, DC, or Virginia area and you want to promote your club like Paul did for his club, we'd love to have you. We'll work with you to get things going. This is how we sort of all learn from each other. And there's no bad presentation or perfect presentation. We're just here to all learn. So please participate. Let's go to our next slide. So I also have stuff up on the Manifest Investing dashboard. You don't have to be a subscriber to get it, but I sort of broke it up by different years. We are just about done with our 4th full year of doing this, and we do it by those that the audience likes and those that were featured and by a particular year. So take a look at it and see how it is. If we go to the next slide, there's hyperlinks for all of them. Another reason to be able to sit there and download this presentation, the slide deck, so you can be able to have all the hyperlinks for that. Next slide. And last but least, here we'll find us up on YouTube. Hopefully I'll get this up either late tonight or early tomorrow morning. There's a hyperlink to the YouTube channel, but thanks for visiting. And we look forward to seeing you next month when we'll dig into the September edition of Digging into the BI. Good night, all.